This is Gatos FX. With me, the Gatos myself here. I'd like to take you through the review of AUD USD, a trade for this week, whereby as we speak now on Friday, prices just moved with 175 pips, which makes a total 5.3 risky to reward ratio. The entry was triggered on Monday based on 3 hours time frame. Inside formation after the shift of the structure, the moment price get into weekly time frame resistance zone. The bullish movement which we have seen from the AUD dollar was only a retracement of the higher time frame in order to have further continuation with the trade. So I take you down through the top down analysis of this pair to see what I was actually looking at. Ever since here is where the price was on Sunday during analysis. So it was a matter of waiting for the retest and then further continuation the downside up the daily price flow and the price ceiling zone. So let's go to the higher time frame to see what actually happened from the top-down analysis of this pair. So when I do analysis, I'd like to clean my chart, make it super clean, and remove the latest current candle because the month is not yet closed. Then let's look at this market from the very bigger picture. You see, we have had a swing low point here. When was it? It was February 2020, and then market created a higher high here in January 2021. So these are the most latest swing point. So whatever happens in between will represent the minor structure. Like what we see now, this market maintained lower low, lower high, but faced a little bit of consolidation for some few years until January this year, when this market was able to break under this consolidation, as you perhaps could see. So we normally know when the consolidation is broken down, price will have to come to retest this consolidation zone and then continue with further bearish agenda. And this something is giving us the latest monthly highs point being there and the latest monthly swing point being here downside, right? Then within this consolidation, perhaps we see we are having, if we use ICT concepts here, there is a fair value gap here, right? So price eventually have had this bullish retracement to come and cover this fair value gap. Here is where the liquidity is. Here is where the liquidity is, and of course it is found within monthly time frame support zone, which has been broken. Then we expect price to come and retest at the liquidity that will be found within a monthly time frame fair value gap. Okay, so next we move to the weekly time frame and see what's happening. So when you get to the weekly time frame, what I see is that this bullish retracement actually price came to retest at what? You see, price has entered, first of all, monthly area of interest, all right, filling this fair value gap with this what? COC. So we have had a weekly COC being tested at a monthly fair value gap. And again, another conference, while price came at this area, you see that we are having an indecision candle. We are having a doji right here. It's the daily doji time frame candlestick. So this is indicating that the buyer's power has been exhausted after this price came to fill in the fair value gap. So we are looking for any confluence that will tell us this market is buying. So where there was a doji, looking at clearly at the daily time frame, you will find out that there was what? There was middle of two structure liquidity, which has been tested. So this price came to retest this MDL price came to retest the MDL. How many pips were there on Thursday and Friday previous week? Here is where this liquidation took place. Okay, so we could perhaps see it was very, very fair. Right. So here is how the things were in on Sunday. And in terms of conference, you see, you can call it a very sharami, something like that. That's why it necessitates to go to the next lower time frame to look for more pattern. However, I have had to respect this daily time frame, the support zone around these areas. You see, whenever price was here, there was some reaction. Okay, so just respect that daily time frame zone and thinking to close these trades at this level. Okay, all right. So then I shift to the next lower time frame to see what's going to the 4 hours time frame. Price was still bullish. Why? Because the trend was still buying. The trend was still buying, so we need to get a lower high to make it. There was no confluence for bearish until 3 hours time frame. 3 hours time frame now, we see this price had a shift of structure at this area, giving a bearish direction change with an inside formation. There was an inside formation around this area. Then the stop loss could perhaps be 30 pips. It's okay. What are you looking at? You're looking for a retracement and then further continuation to the downside. Something which has happened on Monday. Price retested that inside formation with a very beautiful sniper entry here. A very beautiful sniper, and then sellers continue to dominate and take control of the market up to date. Friday price has not yet closed, but I'm still holding. No, I just hit the TP. It's Friday now, end of the week. 175 pips is something not little, but the lesson here is just to look at the trend. Always respect the trend. Always respect the order flow, area of interest, and point of entries. Then forex will become much easy. And perhaps you could see here the drawdown was only 6 pips. Drawdown was only 6 pips with a TP of 175. So watch out, guys. This is Getos FX. See you next time.